A lot of people think their credit score is just this random, mysterious number that kind of just happens to them. But here's the thing. It's not a mystery, it's a system. And today, we're handing you the actual blueprint to become its architect.
See, most of us are told the big secret is to just pay your bills on time. And look, that's not wrong, but it's like playing checkers when the experts are out here playing three-dimensional chess. They get that credit is really a game of strategy, of timing, and of leverage. That's the real difference between a good score and a great one, and it's exactly what we're going to break down right now.
All right, so every great building needs a rock-solid foundation, right? So let's start with the absolute essentials, the non-negotiable moves you can make to show lenders you're reliable right from the get-go.
To win any game, you first have to understand how it's scored. And what's wild is how much of your score comes down to just two things. I mean, look at this: payment history and credit utilization. That's 65% of your FICO score, right there in that one chunk. If you can get a handle on just those two pieces, you're already most of the way to an amazing score.
So let's zoom in on that second huge piece of the pie, credit utilization. All this really is the percentage of your available credit that you're using at any given moment. And here's the secret. This is the number you have the most direct, month-to-month control over. It's the main lever you can pull to make things happen.
So how do you build that proof of reliability from scratch? Well, here are two really powerful moves. First, something called self-funding. This is where you use a secured card where your own cash is the collateral. For the lender, it's zero risk, but for you, they report your perfect payment history to the bureaus. Second, and this is a really clever one, the utility flip. You take a bill you're already paying, like your phone or electricity, and just pay it with a credit card. All of a sudden, that expense, which the credit bureaus would normally never even see, just turned into a positive, on-time payment that gets reported every single month.
Okay, so with that foundation in place, it is time to level up. We're about to get into the real expert-level strategies. We're going to shift our focus from what you pay to when you pay. Because as you're about to see, timing isn't just a little important, it's the secret weapon that can completely transform your score.
And this secret weapon, it's got a name: the 15/3 rule. Trust me, this simple timing trick is a total game changer for controlling that all-important utilization ratio we were just talking about.
Here's how you do it. And the first step is the most important one. Find your statement closing date. Now listen, this is not your payment due date. Then, about 15 days before that closing date, you're going to make a payment to knock down most of your balance. Then, you follow up with one last, smaller payment just 3 days before it closes. So why is this so clever? Because the banks take a little snapshot of your balance on that closing date, and that's the number they report. This strategy makes sure that when the camera flashes, your balance is as tiny as possible.
And this right here, this is the goal. I mean, everyone says to keep your utilization under 30%, and that's fine, but getting it under 10%? Oh, that is what separates the good scores from the truly exceptional ones. The 15/3 rule is your backstage pass to get into this elite zone.
Now, let's talk about another timing trap. Picture this. You just got a new credit card or a big limit increase. What's the first thing you want to do? That little voice in your head says, let's go shopping. But the pro move, it's to do the exact opposite.
And here's why. It's a strategy called the 30 to 60-day hold. Let's walk through it. Say you get approved for a new card on April 15th. The key is to just wait. Don't use it yet. When your first statement closes in May, the credit bureaus get a report that shows your shiny new, much higher credit limit, but with a zero balance. This one move instantly drops your overall credit utilization and can give you a huge score boost, all before you've even spent a single dollar on the card.
So you're mastering the monthly tactics. Now what? It's time to zoom out and think bigger. Let's talk about how to leverage everything you've built for some major long-term credit growth.
Okay, here's a piece of advice you probably haven't heard before. Stop applying for credit with total strangers. Seriously, think about it. The banks you already do business with, the ones who see your paychecks coming in, your consistent history, they're your warmest leads. That trust you've already built is your unfair advantage.
So for example, let's say you have a mortgage with a bank, and you've made a solid year of on-time payments. You have built an incredible internal track record with them, so when you go to apply for one of their credit cards, they don't just see a random application, they see a reliable customer they already know. This just dramatically increases your odds of not just getting approved, but getting approved for a really high limit.
And when you are ready to apply, you gotta be strategic about where you go. Not all banks are created equal when it comes to handing out high credit limits.
These guys, for example, are known for being more generous with their starting limits and giving you more room to grow over time. It's all about playing chess, not checkers, making every single application count. And just remember, patience is a huge part of the strategy. Applying for a bunch of credit too quickly makes you look what they call credit hungry. It looks desperate to lenders. The pro move, wait at least 90 days, sometimes even up to 6 months between applications. It shows confidence, and it shows you're in control.
All right, we have covered some seriously powerful strategies. So let's boil it all down into the final architect's blueprint that you can literally start using today.
Here it is, your 4 key plays. First, master that 15/3 rule to keep your utilization under 10%. Second, use the 30 to 60-day hold to get a score boost from new limits. Third, leverage the banks that already know and trust you. And finally, be patient. Space your applications out by at least 90 days. This is it. This is how you architect an exceptional credit profile.
And remember, this whole thing isn't really about a number. It's about building opportunities. It's about what that number unlocks, whether that's a home, a business, or just a better future for your family. You now have the exact same blueprint the experts use, so the only question left is, what are you going to build first?
Okay, so now that we have the why, let's pivot to the how. This whole section is about gentle, practical, trauma-informed tools that you can use to start taking your power back one small step at a time. This first tool is incredibly powerful for stopping a shame spiral right in its tracks. The moment you feel that wave of anxiety or shame, first, just name it. I feel anxious. Second, normalize it. Give yourself some compassion. Of course I feel this way. And finally, neutralize it by reframing the situation. This simple process creates a little bit of space between you and that overwhelming emotion. All right, when panic hits, you need a quick reset button. Try this. Inhale for 4 seconds, hold your breath for 2, and then exhale for 4 seconds. Just 10 seconds can literally signal safety to your brain and pull you out of that fight or flight response. Let's be real, facing a pile of bills can feel completely overwhelming. The micro-bill ritual breaks it way down. The goal here isn't to tackle everything at once. It's to prove to your nervous system that you can complete one tiny financial task and be totally okay. And celebrating at the end, even just telling yourself, good job, that's a crucial step in building a new positive association. I want you to think of this not as an act of fear, but as a profound act of empowerment. Creating a safety plan is about building a fortress around your financial autonomy. Every single one of these steps is you declaring that your financial future belongs to you and you alone. Okay, in this final section, we're going to look at how all these small, steady actions can come together to create a completely new financial story for yourself. Now, this is a beautiful and simple formula for rewiring your brain. You can undo financial shame through gentle, positive exposure. By pairing a small, safe purchase with an act of learning, you create a new neural pathway. You're teaching your brain, one little experience at a time, that money can be a tool for growth and empowerment, not just a source of fear. So I'll ask you, what could that look like for you this week? Maybe it's buying yourself a coffee while you watch a financial education video, or maybe it's buying a new notebook that's just for your budget. The goal is to consciously create a new positive money memory, no matter how small it seems. And please remember this. Breaking these deep-rooted cycles isn't about some forceful, dramatic battle. It's all about the small shifts. Choosing differently just once. Setting one boundary, pausing for a breath before you react. Every subtle, steady choice is a sacred act of healing. I want to leave you with this affirmation. This is your story to write. You are not your past patterns. You are allowed to feel safe with money, and you are allowed to feel safe in love. You are already rewriting your story, and you are doing it with so much clarity, dignity, and incredible courage.